Good morning and welcome back. In your consumer news, the highest inflation since the 1980s is really making holiday budgeting a more complex equation for millions of families. Overall, holiday spending, it hasn't slowed yet. According to the National Retail Federation, most families, they're making some sacrifices to buy presents for their loved ones. So joining us to talk about that and the ongoing inflation issues and maybe some strategies here is local financial professional Stewart Fields from Open Air Advisors. Good morning to you.
Good morning, Cleo. How are you?
I'm doing well. Glad to have you this morning. So what did the, latest inflation report reveal?
Well, early in the week, we actually got some more positive numbers from the inflation report. So it's the second month in a row that inflation is beginning to show some signs of cooling off. So inflation is hovering about 7.1%, which the good news there, this is about the lowest we've seen since November of last year. So inflation's beginning to cool down just a little bit. However, it's very, very high considered historical and where the Fed really wants to have interest rates and inflation fly at.
Right. Well, there's a little glimmer of good news there. Stuart, how is inflation, affecting holiday shopping this year?
It's really affected a lot. Not only personally, I've got a 4- and a 2-year-old. I'm trying to, get some gifts for it. I look around the aisle. I'm like, oh my goodness, prices have really increased. But when we start looking at holiday spending, retail sales actually came out. So early in the week, when the good inflation report came out, we saw stocks begin to soar. But that trend kind of reversed late in the week when retail sales came out. So last year, sales were up around the holidays. People were eager to come out of the pandemic. Holiday sales were up 14% last year. This year, they're beginning to slow down quite a bit. So we saw that good upward trend in the stock market kind of reverse, Thursday and Friday. So those are things that we're kind of continue to keep an eye out. That's probably not such a good sign heading into 2023.
What are some money moves, we should consider as prices continue to rise a bit here?
It's one of those markets right now where the more proactive you can be, the better you're going to end up being. So I would definitely have some proactive conversations with your advisor, update your plan. Interest rates right now, if you haven't touched your plan in a couple of years or even 3-4 months, this is an excellent time to do so. There's some really good opportunities out there to kind of match up your risk, your objective, to stay on track or maybe get you back on track. So there are some good opportunities that exist today that didn't exist, just several months ago. So I would definitely stay the course, reach out to your advisor, ask those kind of questions you've been lingering about, because, we're going to have a volatile December. This is the first time in over 10 years that about 85% of stocks are over 10%. So a lot of big corporations will be selling to harvest these tax losses. So we expect a lot of volatility throughout the end of the year and hopefully kind of pick back up in January.
Stuart, before we go here, this is your world. When will inflation start to reverse a bit? Because we're getting ready to do the holiday meals again. I've been going through the grocery store and the prices are still kind of high.
You are 100% correct. They are. And that's a question that we address a lot. We have a couple client lunch and learns we've done here recently where that was the hot topic is Stuart, when do we expect this to trend? And the answer is we don't know, but maybe late 2023 is what most signs are pointing to.
All right, Stuart, thank you so much for joining us this morning and happy holidays to you.
Thanks, Cleo. You too.
Of course.